Hello and welcome again at Stocks Advisor channel. Today we'll talk about Novavax Incorporated, traded at Nasdaq, ticker name NVAX. Well, Novavax today finished with, of course, positive trade, being plus at 12.42% and finishing at 227.19. And after hours, it's just small volatility you see below 0.6%, which doesn't matter actually. It's just within the volatility range. And first of all, let's understand what's happening with the stock in general, what are the tendencies here, and then we can talk about how to buy and how to make the profit. So what we see is a general growth, of course, and you can clearly observe there is a clear trend. Let's name this one T1. So there's a clear upwards trend T1 that is, again, that was confirmed 1 week ago with really beautiful rebounds here, and now we're a little bit higher than it. So with these rebounds we confirmed it, and now we're a little bit higher. So the wave could still let's say break, but given the fact that we made this very beautiful, almost shadowless upwards candle, and it looks like it's like a secondary step already after having a dark doji previously by Thursday. It still means that we might continue with the growth until there is clear indication of, let's say, end of the current wave or breakage of the current wave. Still, what we need to keep in mind is that it's not just the growth that we observe usually, because we have here standing on top a very, let's say, bad or strong, psychologically strong resist level that was formed by beginning of February, also sending the price in RSI in very oversold area, overbought area, sorry. And then this means that these levels are quite high, and even there is lower level also that might work for us as a very strong, let's say, resist. So in general, the range between, let's put it here, between 240 and all the way to actually these levels to 320 plus, let's say, is kind of a deceleration area where most probably the price won't go higher. And there is another one which we can still reach is to till 277. The second part between 277 and 323 is really a very strong resist area. So with this being keeping in mind and this being said, we need to understand that most probably there we will break the wave, because looks like that we are in the very long consolidation, and simply speaking it might resemble the situation that happened previously in December-February price action, where you can see we were trading actually here forming kind of this pattern. So you cannot really call it let's say a triangle, but it was kind of converging channel, let's say, and then of course it resolved with a very positive trade. So now looks like we might be forming the same, and indeed if this is the case, if we are doing it, if we are forming it, it would mean that, okay, we don't know yet the angle here, but it might be just with these levels, might be a little bit higher, lower, but we just, let's say, the most wise way would be to wait to a lower part, or to wait, let's say, to the at least to the middle of the trend or to the reconfirmation. So what would be advised here is to start buying at anything below the middle of the current, let's say, let's magnify it, in the middle of the current candle body, because this will be the volatility point that was formed also previously, just at 212. And let's write it here. So it will be between 212 and all the way below till actually the T1 trend line, which will be in this case these levels, and it will be 181. So let's write it here as a first call out for us. I will use only dollars, because with these big, let's say, amounts, cents does not matter. So it will be between 181 and actually 220. So this would be the first area to buy through, because whenever this is activated, if not immediately but later we will come there, it will be the lower part of this let's say, channel that we discussed between 240 and 181, and also it will be in the vicinity of T1, which still works as a very good, very strong support level for us. And if we confirm indeed the pattern similar to the one observed in December, February, so kind of converging channel, then you will be right in time and a very good moment to buy, to make a profit, to return to the levels of in the vicinity of 240, still able to make up to 10 to 15%. And here will be, as always, as usually we do advise at our videos, in our opinion videos, that profit-taking strategy and target will be 10 to 15% from the money allocated in the position. So this is very important. Although you might say, well, there are huge volatilities here. Yes, this is true, but if you're a midterm trader, you might wait a little bit longer. But if you're a daily trader, it's better to take a profit and then re-enter or check other videos, other opportunities. You can find also many stocks discussed at our channel as well. So this is very interesting level to buy through. If we continue declining, imagine we still might break the wave, and instead of forming converging channel, it could be still a flat channel, because here we see also very strong level that was formed in December, but also reconfirmed by beginning of March, and this is the level of 150. And there, by that time, also moving average 200, this red line will be there in the vicinity. So if the price starts to decline, everything between 150 and 139 will be another very good opportunity to enter, because it will be again a very strong, even double support. So because as I said, here will be moving average 200 in the vicinity, and also the channel itself as a support line. So 150, 139, let's write it here again. So 139 to 150. So this will make it a second level to buy, still within, let's say, the technical expectation, technical behavior. It would just mean that instead of having similar to December, February action, converging channel, if we go to the second level here, it would mean that we are going a little bit, let's say, a secondary decline. So we will probably just pull the level of trade lower, but this is still possible within the technicality, and then actually the second level will be very strong support level. And then, as always we do at our channel, we need to take into account possible negative catalysts kicking in. And these are not price that we wait for. This is just mitigation of the risks, if any. And it's very simple to do, in the sense that you just need to look at the very principal trading levels at least half a year ago. And if you do this, you can clearly see this is actually the level, and the lower part of it will be 100, and the upper one will be just before this trading channel between 112 and 139. So it will be 100, 112 as a last, well, it's not really the price expectation, it's just risk mitigation, 100 and 112. So this will be to mitigate possible negative catalysts kicking in, if any, while others will be taking losses. You can just buy there and make your profit. And if you ask yourself how you buy here, how we trade, it's still a classical trade. You don't see any, don't anticipate any extra, let's say, risk. So it's a 5 portion. For those who are already subscribed to the channel, don't know what it means. It means that the money you would like to play here, you can split in 5 portions. Then you can buy with 1 portion through the first channel. If we decline further, still within the technical, let's say, possibilities or technical situation, you can buy through the second channel with 2 portions, meaning you buy through 139, 150. And then if any negative catalyst kicks in, we know this could be very severe, not forgetting this decline from the very top, which was by mid of February, and then all the way to 150, almost 2 times, more than 2 times decline. So we just need to keep some funds, in this case, to average down, and these would be the last 2 portions from those 5s. And with this being said, it will be the best optimization for profit versus loss. So you can still trade here and without taking any losses, exit, at least in the worst case scenario, exit with a draw. Sometimes people ask, well, you can plot actually any lines, if you like, in this strategy. Well, that's not completely true, because the levels we decide to buy in, these are based on support resist, really principal levels. So this is important. It's not just an arbitrary level in between you pick up, and also you need to carefully choose those, because you really want the price to go there if it goes, and you really want it to rebound if it rebounds. So these should be really principal pivoting levels, and these are discussed here. So with this being said, good luck with NVAX. To begin, to repeat again, the most expected trade is to rebound from the first channel. Other two are just mitigations of, first is technical risk mitigation, second one is negative catalyst risk mitigation. So with this being said, see you at another episodes of Stocks Advisor. Please don't forget to subscribe, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.